but over 500,000 actually were. Sounds good in theory, but all you have to do is look around your local grocery store or gas station and you know something's not right. I was in Atlanta a week ago on Saturday, and the restaurants had a waiting time of 45 minutes, and yet they were half empty because they didn't have enough staff to take care of the people there. Meanwhile, the Federal Reserve has reason to fret over this report because they haven't slowed down the economy. Meanwhile, President Biden and Speaker McCarthy are still hammering out talks about the debt ceiling to no avail. Well, some Republicans are floating an idea around about rescinding unspent COVID funds as a way to prevent defaulting on our national debt. That's probably a good idea. You mean if you didn't spend the money, you don't get to rush out and spend it in 2023? Well, that would make sense. That's what people do. They rely on their savings, and that would be savings, right? Joining me now, Terry Sawchuk from Sawchuk Wealth. Terry, I concern myself with the first thing being the Fed, because the jobs over 500,000, they're trying to slow down hiring. It was expected to be 190,000. It's 2.5 times that, almost 3. What are they going to do?
Well, it's a little misleading, Steve. Number one, a lot of these are service sector jobs, right? So restaurants, bars. So the problem you just ran into in Atlanta may be being resolved to some extent, but they're certainly not higher paying jobs or relative to an engineering job or other things. So I don't know how much that's really going to help the economy. The other thing is it's a lagging indicator. Unemployment is, or employment, relative to what's actually going on in the economy. And ultimately, if you go back right to before COVID, we're still, I think, 200,000 jobs fewer than what we had then, even with this big increase, because of how many businesses we put out of business due to the stupid COVID restrictions.
So we look at those COVID restrictions. We know that the president said in September on 60 Minutes, the pandemic is over. And yet they keep extending it out. Now we're up to like May the 11th. I mean, how long do they want to stand on the chest of small business and see if it can breathe and survive all of this? I mean, where we live here in Michigan, thousands of companies went dark forever. And that's true all over this country because of the pain inflicted by COVID restrictions and lockdowns. And if you're not an essential worker, I think everybody that has a job, they consider their job to be essential. But then the government comes in and makes winners and losers. And I mean, how do you continue to perpetuate that fear mongering?
Well, their whole regime is based on fear. It's a lot easier to control people and to get people to vote the way that you want or to behave the way that you want when you have them acting emotionally. So when you look at the COVID stuff, it was the biggest wealth transfer in history. You put all these little businesses out of business. The companies like Walmart, Amazon, Costco. These companies got bigger and bigger and more profitable. So in the end, they've ironically, the Democrats always talk about the wealth gap and the inequality, but they're really the primary reason why that gap got so much larger over the last few years.
So how do we get through this, Terry? Because I look at this, the Fed's going to raise the interest rate again. They have no choice, right? They think they have no choice. I don't know when it'll be, a quarter point, I would guess, maybe a half point. They're going to do it again, which means anybody that has credit card debt, which a lot of people are relying on, get pinched harder. If you have a variable rate mortgage, you're going to get pinched harder. You're going to have all of these things happen that continue to squeeze and squeeze and squeeze your family budget. I mean, there's only so much people can take, right?
There's a limit, Steve, to everything. So as far as the family budget goes, I mean, on one hand, they want to fight inflation and bring, the cost of eggs down, right, or the cost of gasoline and other things. So you've got that going. But on the flip side, the jobs that they're creating are low-paying jobs, which makes people more susceptible, clearly, to the inflation issues that we have. And in the bigger scheme of things, like I just mentioned, it keeps creating that larger wage gap. And I think that we're going to head ultimately towards a recession. And it's pretty clear, Steve, you and I have talked about this a lot, but it does not appear that the United States government has any interest in seeing the war in Ukraine end anytime soon. The longer
In
that
fact, they
goes
continue
on,
to fund it. Now, not only do they not want it to end, we're putting battle tanks there. We've invested $100 billion of money we don't have to protect a country we have no arrangement and no agreement with, while Europe doesn't pick up their piece of the pie, which they should. We don't want to end it. Apparently, we want to enhance it. In fact, it appears that we want to have a war with Russia, because I don't know how you look at putting tanks on the ground other than a declaration of war. Call me crazy.
well, I don't know the nuance at that level. It clearly looks from our standpoint, Steve, you and I, like it's at minimum a minor escalation and possibly, more than that. But if you look at who benefited from this, let's face it, when the Nord Stream pipeline got shut off, Europe had to buy all their natural gas from elsewhere. And who do you think they bought it from? They bought it from us, right? But you look at that and go, well, okay, so it makes you wonder if the United States might have been responsible for that. And if that's true, and believe me, the people who are close to that situation very likely know who was actually responsible for it. It's hard to trust the United States if, on one hand, they're trying to help you. On the other hand, they're also trying to not help you or sell you gas at 10x the regular price. So our foreign policy right now, I don't understand it. It's almost as if everything they're doing is intended to make the situation worse. And if you apply that lens, then it makes perfect sense.
Yeah, and just a real quick update as I look at you bring this to mind, so I take a quick look. Gas prices across the country, national average $3.50. A month ago it was $3.22, so it's gone up quite a bit. Diesel is a penny lower than it was a month ago. That's good for all of us because the whole country moves on diesel, whether freight locomotives or 18-wheelers or whatever it might be. But compared to a year ago, diesel was $3.75, gas was $3.41. So compared to a year ago, we're higher than we were there. And again, all of these things have an impact, Terry. I feel like you're probably right. There's a recession. I don't know. My tea leaves are all screwed up, Terry. I've got you here to help me out. And they're just like, put out my tea leaves and the wind's blowing. Would you help me here? Are you positive about the future? Pessimistic about the future? What do you really think?
I think at best, Steve, I'm neutral for the remainder of this year. One thing that nobody's talking about.
You're going with neutral. It's Friday.
Yeah, well, look, the stock market's range bound. And I'm going to let you in on a little secret, Steve, that very few people know about. There has been a massive increase in something called 0 days to expiry options. Okay. This past Wednesday, the options traded was the highest volume ever recorded in the history of the stock market. And options trading made roughly 50% of the volume on the exchange. You heard it here first. This is a disaster waiting to happen.
Okay.
This could actually take the stock market quite a bit lower if these options go from calls to puts.
I appreciate that, Terry. At least you came out and waved one red flag for us here on this Friday. I appreciate that. You stepped up. I begged you. I pleaded. You said, I got a red flag for you. Fair enough.
This is a big
Terry
one.
Sawchuk. Yeah, okay, well, Terry Sawchuk, you heard it here first. Sawchuk Wealth, look him up online if you want to know more. He's a fascinating individual. Terry, thank you as always.
Good to see you, Steve. Have a good weekend.
You too, my friend. Good to see you.